The broadcast is now starting. All attendees are in listen-only mode.
Dale, I think you're muted.
How about now?
Can hear you loud and clear. Good morning.
Okay, it was on my headset. Okay. Hello, Warriors. Face, everyone doing okay? It is Turnaround Tuesday. So thinking about what might be a candidate for it, sometimes these Turnaround Tuesdays work out pretty well. Sometimes they're turn nothing around Tuesdays. So looking at, if you're a subscriber of ForexAnalytix, Andre has a counter trend trade here in the euro. It's a shark, and this was a candle that probably enticed and showed completion in it, and we haven't taken out that low yet. So I'm looking at the euro here. All right. Also the Dixie making new highs with another non-confirmation right here on the 1 hour. The 4 is even more glaring. And it's still my contention that if there's going to be any relief rally that lasts more than 2-3 hours in the stock market, and we're going to have a decent recovery. We started strong like this yesterday, but the dollar never really cooperated. Dollar just drifted higher all day yesterday. If we could get some type of correction in the dollar, I think that would be supportive for equities because, it would help things like oil. It would also help a lot of the transnationals who've been complaining about a strong dollar. So that's my Turnaround Tuesday candidate. We're all captains of our own ship. This is just a, face trade, call it a face trade. It's not a pattern in play. And I teach that anytime you have market moving your way, 15 to 20 pips, you always just take half, tighten up your stop to BE and let it run. Or the worst case scenario is you made money. So looking at both the euro and the other reason for the euro is, euro pound actually looks pretty good. Started talking about it last week. And we actually got through that resistance level. I know a lot of people are looking to sell strength into, what was previous resistance right here. Look, we've cut through it. And all of this on euro pound has been more about relative weakness of the pound. It hasn't been because of any euro strength. It's just because the euro has not been as weak as cable. So this is starting to shape up and starting to make this look like this was just, a trap. And once we got back above this moving average in here at 88.35, and this was a big, breakdown under 40. We're well above it. By any pullbacks here, I think we're on our way to new highs. It's always been my contention. There's a high missing here. And maybe part of the journey for euro pound, if this should turn out to be correct for a new high, is not just going to be pound weakness out of Brexit fears, but that we actually have a little correction in the dollar, and the dollar gives up some of its bid. And since euro pound is trending up, your preferred long is always a pound. If you use it just for your preferred long is always a euro when EG is going up, and your preferred short is a pound. So if you've been choosing your preferred long, you're not making a lot of money because the euro continues to decline. Maybe you have scalps intraday, but you've been making money selling rallies, which is what the EG has been telling you in cable. You've been making money doing that. So I've been doing the other. I've been trying to buy breaks, thinking EG was telling me something about an imminent correction in the dollar and the euro because it's outperforming cable. Okay, so turns us over to gold. I had some guests on that talked about 1246 being the high a few months ago when we were still way down here. And maybe that was it. But, like I said, I really don't want to short gold until I see how it acts during the dollar correction. So I'd like to see the dollar correction so I could get a handle on if it matters to gold, because the strong dollar did not matter to gold. I'm wondering if a weaker one would, at least for a little while. Silver really gave up the ghost yesterday, much weaker. I think when I had Saeed here, but this actually looks like I still think they have to clean out the bears here and go for these stops before we have a bigger decline. This actually could be a decent turnaround Tuesday candidate too. Gold had been outperforming silver. Saeed, when he was here, showed the gold-silver ratio. Maybe I'll get Steve to show it. I think it was like almost at new all-time highs. Look at the candle here in silver. It's down 0.1%, where you have gold down 0.7. So if I was going to look to fade something, I'd fade a silver weakness and buy that over gold now. Perhaps in the final stages of what a lot of people, and myself included, think is a bear market rally in precious metals, that the silver actually takes over leadership. So I like silver here too, with maybe a 15, 20 cent stop. And also I do think the dollar coming in would be supportive for silver. So any questions? Where should stops be on Dixie? Everyone is a captain of their own ship. I recommend letting your stops breathe, Dina. So I think at least 1 day's ATR. I think it's a little over 50, maybe 60 pips. Yeah, something like that. Because the dollar would blow out the divergence if it just kept marching. Here, let me show you quickly, and then I'm going to pass it over to Blake because I want to learn today. Okay, see how we're diverging here. So if we kept marching, we might blow out the divergence. And the 1 hour, it's not even the best RSI setup, because it actually, I think, traded a little bit above 70 up here, but getting like a little negative candle here. And I really think the conservative sell is all the way down here. Okay. I mean, we're still talking about this market's in a throw over, right? So, I mean, it's my contention that the throw over eventually will be negated, but look, it's giving you some heat. Similar to what happened when the US dollar yen was soaring and shook out every bear, and it did a throw over. See this? But then back inside the line here was a good trade. So something I'm using that as kind of an analog for me. Okay. And I do want to encourage everyone going into give yourself a early Christmas present and find a good broker, someone you're really happy with. You get rebates. You just go to Forest Park. And if you're overseas, you'll get our fine service for free. If you're not, you should be getting some kind of rebates.
Or start getting rebates by staying at your own broker as well. That's also
the squeaky wheel gets the grease. So you have to. If you don't ask, you're not going to get it. So
but the most important thing is that anyhow you have nothing to lose to get some advice and make sure that according to your trading account size and your trading method, you are actually at the place you should be, right?
Mm-hmm. You mean based upon spreads, etc.
Yeah, or the type of trading you do, because you care about different things if you trade longer term and you open and close positions rarely, and you care about other things if you're a scalper. So in
Right.
one case, spread might be important. In the other case, overnight rolls might be more important, etc.
Right. The carrying charges of the trade.
Yeah.
Yeah. Okay. Beautiful. How are you today, man?
I'm good, Coach. How have you
Yeah.
been?
Good. Yesterday, I think both the Blake and me, it looked like, the S&Ps had settled down, and they're, now we're going to look for a bear market rally, and really took longs to the really flushed them out yesterday, but they're still not getting the panic readings, but it was still one heck of a recovery. Do you think that could have been it for a little while?
On which ticker, Coach, did you
S&Ps,
say?
on the stock indexes, because you said
Uh,
we're not out of the woods, which was real
Yes,
correct.
yesterday I told you that we're not out of the woods,
Yeah.
and I really believed that the first attempt of a rebound would fail. We did fail. Yesterday we had a huge outside candle. So yeah, the lower we go, the higher the chance that we're going to get a rebound. But I can tell you one thing for sure: now that we've moved some distance, I mean, especially counting yesterday's lows, but I don't want to bleed into Blake's time.
340 points in the S&P.
Yesterday that we almost made it to 2600. I'll tell you that 2690 is now resistance. It was support, it's now resistance. So, unless we see a move above 2690, I have no reason to change my bias. Anyhow, I don't want to bleed into Blake's time. So, but, Blake is going to give us his insight, and I'll be here, of course, afterwards. And from what you saw, if you're paying attention to what we write in Skype,
I don't want you to bleed anyway, because hemophiliac is a Greek word, right?
Yes, it actually comes from the word "ema," which is blood, and philia, which means friendship, but it also means it comes from what you understand. It's because when you have like common blood, because hemophilia is a disease that comes when you actually breed between people that have close
so that's from
blood
people
relations.
marrying their cousins. It started.
Exactly. That's why
I didn't know that.
Yeah.
Huh. Okay. Yeah. God, that's also, I love working here. Steve knows all the derivations of the Greek words, and I bring it up, and I'm a more complete human being knowing that cousins were the problem. What do you think, Del? You knew that? Did you know that?
Yeah, I did.
All right. Yeah. You take Steve's course. Steve, you would have been a great university professor.
At some point, I was thinking about it, like doing it part-time. And the most reason I was thinking about it is because as a student, I thought that many professors actually do not teach in the way they should be teaching, in a way that's attractive to students, actually. You know what I mean? Because
indeed, Steve, of course you would.
Yeah.
All
so
right.
Who knows? Life might bring you to that at some point, like part-time, as a hobby, purely.
Yeah. Okay, Prof. Is Dr. Blake Morrow in the house?
He is.
I'm here. I got, Steve talked so much that I had to go tweet my analysis versus talk about it. So just kidding. Morning, guys.
How are you, buddy?
Good. I hear Andre's coming on, so I want to make sure I save some time for him. But it's been, the dollar is making that last push. Well, I don't know if it's a last push up, but it's a push higher towards the 161% extension trend highs. Going into the end of the month, the risk was more dollar buying coming into the end of the month as we got some. There was a lot of circulation yesterday about a couple of days before the end of the month. There tends to be some buying. They attribute it to repatriation, that maybe corporations might be repatriating back into dollars a couple of days before the end of the month. Anyway, that alongside just general overall dollar bullishness and really
it's still
helped
a short up here. Marginal highs. I still think it's a short play.
That's what from a risk reward perspective, it's this might not be a bad place to be on the short side of the dollar.
Look at the RSI.
Well, yeah, the RSI is divergent, at least
Yeah,
divergent
anyway.
right now. The
I've
daily
been wrong a
RSI,
million times, but
but
that's what I'd see.
Dale, also keep in mind this is the daily RSI, and now
Yeah.
DSI is also at 90, which is really
Again,
bonkers. But what can happen is we can stretch and
Yeah.
DSI and relative
of
strength
course.
that can happen. So
Yeah,
but
I know.
mean,
I've been short while that's happened.
yeah, I
At
mean
least once, Blake.
it is definitely possible. So we can't rule that out. Now, if and I agree with you, is if equities can get a little bit of a lift here for turnaround Tuesday, maybe that might help the dollar reverse. And you never know. You
Blake,
could
sorry to interrupt, but this is very important. We have a person saying, I have a family with hemophilia and there's no cousin screwing going on, etc. First of all, nobody said that it's a joke, and it wasn't obviously a joke. And second of all, I want to mention about that hemophilia, we just said that it's a very common disease when you have family members breeding with each other. It's not only due to that. So we never implied or said that, and I want to clarify that because it's important. Sorry to interrupt.
Okay. Thanks for clarifying.
Apologies, Bob.
Yeah.
Yes. All right. Let's talk markets. So, as far as the dollar goes, you're gonna need an equity market bounce in order to see some dollar weakness. I would think it is turnaround Tuesday. Or potentially turnaround Tuesday. One thing about the S&P, I want to point out that the S&P keeps probing new lows. Now you can see how we probe, new lows and bounce, new lows and bounce. These long wicks down here, and let me grab a pen really fast. These long wicks right here are a little bit of a warning, downside warning that that there is a risk of a bounce coming. Not saying that there's going to be one, but that is a risk, because every time you get a dip into below lows and it gets scooped up, that becomes a risk to show a reversal. Now, we also hit the 78% retracement yesterday. Now, the 78% retracement is from the lows in February to the highs, the 78% retracement. So we hit that, and this is also a longer term trend line. You can see through here, long-term trend line that comes into play. So, does that mean you should be buying stocks right now? I'm not a big advocate of buying stocks here, and I'm not. I'm more in the camp of I'd like to sell a rally now, but I think there could be a rally coming, and if there is a rally coming, then what's the best way to play it? If you're dealing in currencies, I have to point out a couple really key developments. One thing that's frustrated me this whole time, this whole equity market sell-off that we've seen. Okay, hold on really quick. The sell-off that we've seen in equities has not produced downside in the dollar yen. And the risk was that if it's not going down, then if we get a bounce, then you're going to see a bounce in this dollar yen. And that's exactly what we're seeing right now. Does that mean that that you should be buying the dollar yen? Well, I mean, you can. I think people are getting caught short right now. I think that's happening at this moment. We held the 618. We held this big trend line support we couldn't push below, and so this is catching people off guard. It's stopping people out. So you've got the dollar yen that's held up, and yesterday I sat here, we were at 112.40, and I'm like, man, why is this dollar yen not selling off? And if it's not, it's like that beach ball effect. You take a beach ball and you try to push it underwater, and you push and it's just you're pushing it underwater, and eventually you get so tired you let it go and it pops right out of the water. It's kind of what the dollar yen is doing right now. The dollar yen is popping out of the water, and because you were not able to make it sink, it's now rallying. The same goes for the Aussie, and I just tweeted the Aussie chart, and we have an inverted head and shoulder pattern developing here. Does that mean that we're going to break out to the upside? Well, I think we need to break above 77.10, and we break above 77.10, and then you can start looking at a move that looks something like this. That could take us to 72 cents, somewhere in that neighborhood. But this is another situation. You have equity markets that have been selling off, and the typical risk-off currencies like the Aussie, like the Kiwi, they've held up really well. I mean, you got new trend lows in the euro, you got new trend lows in the cable, and then you have the Aussie that's not selling off. Okay, you have the Kiwi that, I mean, this is another inverted head and shoulder pattern that's held up really well. And the Kiwi, I mean, we have major trend line coming in just about 30 pips. So if the Aussie breaks higher, the Kiwi breaks higher, it might drag the euro and the pound higher. I'm hoping so, because I still have counter trend longs in those. But the thing is, we have to realize is these commodity currencies are holding up well. I looked at the dollar Canadian, and actually I traded that on the short side yesterday, unsuccessfully. I think I lost a few pips actually shorting it, but we hit the 618 in the dollar Canadian, and we're outside of this channel resistance. But why haven't we broken out? A lot of risk aversion. Why isn't the dollar Canadian pushed higher towards 133? I'm surprised that we're not up there. It's kind of like, why isn't the Aussie down at 70 cents? Why isn't the Kiwi below 65 cents? Why isn't the dollar Canadian above 133 right now, or 132? All of these things lead to the risk of reversal. And so that's why I think you have to keep an eye on the Aussie. The Aussie could catch a bid here. It's already strong today. It's already outperforming today. The Kiwi could catch a bid. The dollar Canadian could come under pressure. Will that lead to the euro and the pound going higher? It's possible. I'm hoping so, because my stops in my pound, I'm long the cable, and it's pretty close. My stops they're very close actually. So I'm hoping that this tide will turn a little bit, and maybe it'll start with the commodity currencies. But we do have to see equity markets retain their bid. And gold's been heavy, silver's been heavy. Gold has not been able to break that 1240 level. It's hard to see gold going up when equity markets bounce. But who knows? I mean, maybe gold is more on the program of weak dollar, strong gold. Maybe that's the case. But I think the dollar index is really probing some pretty key resistance up here at 97, and it makes sense. I mean, from a risk reward standpoint, to short the dollar right here, you have your stop somewhere above 97 if you're trading the index, or even if you're trading counter trend, that if the dollar index breaks above 97, any dollar shorts that you have, you have to take off, at least if we get a good foothold above 97. So from a risk reward perspective, it makes sense. I just don't, how you want to play the dollar. I think the better plays right now, and even though I'm not in them, would be like the Aussie and the Kiwi, but we have to see equity markets respond. We have to see the Aussie take out this resistance. And matter of fact, let me do this really quick. Let me take that off, and let's that it's also the 618. You can see it's a 618 retracement. So that's really going to be very, very critical resistance for the market, as there was also some resistance right here. It's going to be really critical for the Aussie. But I think we watched that above 70.10, and you probably going to get a lift in the Aussie, and you got to watch this Kiwi too, because it's acting pretty well as well. Now, a couple other things that you can think about with the dollar yen showing signs of life, and the dollar yen potentially. You think about this. If you have, let's look at ForexAnalytix. It's better drawn out here, because I drew this out here yesterday. Okay, you can see here, let me grab the pen. Okay, we have a false breakdown right here. Okay, that false breakdown, if you think about like a double bottom, that takes us all the way back to 114, and we're at 112.60. I mean, that is entirely possible, especially if the S&P catches a bid. If we start bouncing in equities, the dollar yen could very easily be trading back up at 114 or close to 114 again, without much issue. So I think that if you're trading these yen pairs, it's not only just the dollar yen. And you can take like the euro yen. The euro yen could very easily bounce back to 130. The pound yen could trade back to 146, 147, maybe back to this resistance here. The Aussie yen. I mean, look at this. This is I have to show you the euro too. So you got the Aussie yen. I mean, we're really challenging some pretty key resistance here. Look at the Aussie yen. I mean, we could, we stab above this resistance, and we're going to start squeezing. And I want to show you also with the euro, because the euro has been very heavy. The euro broke this triangle. Let's go over to the hourly. So we broke down through this triangle this last night, and when we were trading here last night, I was thinking, man, I should just take my euro off here. I didn't, but I was thinking to myself, I should have before I went to bed. But the 618 or 161% extension, excuse me, we're back testing it, right? So if we created a low here, and this is a higher low, now a move above, this is where it turns bullish. So the Aussie or the euro, excuse me, turns bullish above 113.80. It's not very far away, guys. I mean, you're only talking 25 pips away. So I think we keep an eye on the euro, the cable, the Aussie, the Kiwi, the Canadian. There is a risk of the dollar reversing. One last thing I'll state before I leave here is, let's go to, there's the daily sentiment index, and take a look at this number right here. This is the dollar, and it's at 90, which is a very high reading. Anything above 85, it gets a little extended. So once you're in the 90s, that's very bullish sentiment, which is a potential counter or contrarian indicator, right? And so the euro and the Swiss, very low. NASDAQ, S&P, extremely low. Silver, extremely low. So those are all risk, and here's the Nikkei, really low. Those are all very extreme numbers. So the stock market could very easily continue a bounce. Now, again, does that mean we're going to all-time highs? No, but to work off some of these extreme readings, it's very, very possible. And the dollar working off some extreme dollar readings, sure. I mean, we could as well. So I think that those are the risks, and I think we need to keep an eye on, like I said, Aussie, Kiwi, Canadian, and the yen pairs today. And with that being said, I'm going to pass it over to my colleagues, Steve and Stelios, and I know Andre is coming in, so he's got a few words to say about. He's got a good setup in the cable. Guys, can you hear me?
Hello, absolutely, hello. Mate.
Okay. I'm going to pass it over to you guys, but don't forget to visit our sponsors, Forest Park FX. And especially if you want to get ForexAnalytix for free, or at least help pay for the monthly subscription, this is the best way to do it. And all you have to do is contact them through their Skype or email right here at the bottom of the page, and also at the bottom of the description of what it is. So I'll put the link in the chat box, and you guys have a great trading session, and good luck today.
Good hunting, Blake.
Thank you.
Thanks, guys.
Bye-bye.
Steve, before you start, just one little thing. Not much has happened overnight. Not much happened. We had some economic data out of the Eurozone GDP, and it was actually a bit disappointing. Quarter on quarter in the Eurozone came in at 0.2% versus 0.4 expected and 0.4 from last quarter. And in individual countries, France actually surprised high. Actually, no, they didn't surprise higher. They came in as expected at 0.4%, but Italy came in at 0, expected 0.2. So Italy is getting close to negative growth, which we know what that means. So yeah, so that's all I have, actually. I mean, and the other major thing, obviously, was just surprised me a lot. Actually, no, it didn't surprise me, but it was actually impressive how it happened, was the reversal in stocks. After the Asian buying yesterday at the beginning of the day, then, as soon as US came in, it just got slammed. And it's going to be interesting to see if today's rally is going to get sold into again. And, if I was a betting man...
As I said before, Stelio, yesterday I didn't believe that a rally can make it above 27.45. If you see actually here in the S&P, we got rejected exactly from the low that we had in October 11th. We never managed to close above 26.90 on a daily closing basis. So 26.90 remains. We almost made it to my next support area here at roughly 25.95. We did pare back some of the losses. And I think that 26.90 is going to prove to be quite a strong area of support. So I think that unless we go above 26.90 and close above 26.90, we have to remain strongly in sell the rally mode. Now, even if we make it above that, and at some point we're going to make it above some kind of a resistance level and mount like a big rebound. But as I said, since the first big drop that we had here, I think that the technical damage has been done, and even if this is a corrective phase, it's going to last somewhat, at least a few weeks. So I don't think that people should be jumping the gun. Permanent bulls and permanent buy the dippers have already been burned a few times during the past couple of weeks, and that has definitely hurt them. The kind of rallies that we get that get immediately retraced resemble more in my eyes short covering rallies to people that have actually been short, and they seem to be immediately finding willing sellers. So I think we should keep our bearish bias in the short term, at least until something different happens. Now, whichever of the indices we have a look at, the Dow Jones, the Nasdaq, it's the same situation all over, right? So Nasdaq still has some room to cover until it can actually fully retrace the ascending wedge. So I have no reason to believe that the Nasdaq is also done moving lower. The DAX is, as you see, got rejected yesterday from the first area of resistance, made a second attempt to test it today. So far, it's getting rejected for a second consecutive day from the same area. Same deal with the FTSE. FTSE has made, as you see, the previous days, multiple attempts to break through this zone that's around 7,100. All of them have been a failure so far. The Nikkei, despite having mounted quite a strong rally, still remains below 22,000, and 22,000 has proved its importance in the market. So even if we make it up there, I think that the reward to risk ratio is going to be appealing to look for another short, and that ties up rather decently with what we've been saying, and that's why I had closed my short USD yen pattern in play. USD yen was more than obvious that it didn't actually want to break down. I know that Blake mentioned it, so I'm not going to go into details, but let's just say that I'm interested to see what's going to happen when we rebound to the confluence of resistances that we have at 113.40. Actually, if we go down to the 4-hour chart, you can see more clearly why this is a nice confluence. First of all, it was more or less the neckline of the head and shoulders formation that marked this top in the short term. It's also the 61.8. It has also been an area of support resistance. So I want to see what's going to happen from there, from 113.50 roughly. If we get rejected from there, all good. There might be at least one more leg left lower. Now, if we actually breach above that area, then we have to just look at the big picture. And the big picture is that we will have held this ascending pattern. Of course, this ascending pattern doesn't look that bullish, but it can definitely then retest the highs again before perhaps failing. Anyhow, USD yen has been a little bit obnoxious, and that's why I didn't give it much of a chance. And it was the right choice to actually bail out from it. Now, having to do with the DXY, I know that Blake covered it. I just want to show something else that I mentioned the other day. Oops, wrong place. Blake mentioned that we are approaching the 161.8% extension. It's also a quality target. We're currently testing the highs. A quality target of those two legs higher is at 97.10. But what I do like, and I said it yesterday as well, is this confluence of resistances at 97.85, because it's the 61.8 from the whole bear move that lasted roughly 1 year, 13 months, lower from the very beginning of 2017 to February 2018. So that's the 61.8 there. It's also the 127% extension of this move lower. So, this is an area of interest that we're currently testing, multiple resistances between 97 and 97.10. And if we surpass that, 97.85, it's a very interesting level. I think that, if we make it up there, it's also going to offer a very nice risk-reward opportunity to try the short side of the US dollar. Now, I have not much to mention about the cable and the euro. Personally, I wasn't looking for a rebound. I know that Blake is still looking for a rebound. And, it might happen. I know there is a harmonic pattern there, and it's a very good thing we're going to have Andre today with us, because Andre might actually show us if he thinks that there is still the active opportunity and possibility of a harmonic pattern, producing a rebound. But once we broke below this formation, I was looking for at least a retest of 128, and at a break below this 128 zone, which we might see today. We are currently probing below it, but of course it's early on the day, so we have to wait a little bit longer. Then that opens the 126 area for a retest. Personally, I find it quite a high probability, especially if we reach the second target I was talking about in the DXY, the 97.85. I think that most certainly that will also have brought the cable to the 126 area, and it might have at the same time brought the Euro USD not only perhaps to the 113 area, but might have even brought it a little bit lower to actually retest the broken resistance of this huge channel. That's why I zoomed out, of this huge channel that the market was holding for a long period of time. So this is the extension of the same channel. So why not? We might actually retest it as support. So I have no reason to be looking higher in the Euro USD in the cable until proven otherwise. That's why I'm still looking lower. But what is undisputable, on the other hand, is that yes, Aussie and Kiwi have been behaving better. I have been warning for some time now that they do remain in a descending channel, so we have to respect the downtrend, but momentum has clearly been waning, and that clearly is a little bit troubling. I would definitely not be selling those two currencies down here, and especially if we switch to the Aussie yen and the Kiwi yen. First of all, we see that there is a possibility, of course it's too early, but I have to mention that there is a possibility of a double bottom here in the Aussie yen, because if you see, we tested the lows yesterday before rebounding. Of course, there is still much more room to confirm something like that. And there is some possibility of a quadruple bottom in the Kiwi yen, because actually Kiwi yen has held the same zone for 4 times already. I mean, that's if it proves to be something like that, that's something that you will see very few times in your life. Like, I mean, double bottoms, double tops are decently rare. Now, if we're talking about triple ones, very, very rare. Now, if we're talking about like quadruple ones, if that proves, if we break above, let's say, at some point 75.50, which is going to make that like a quadruple bottom. That's going to be like, something that you'll have to note down, because I don't know how many times you're going to see in your trading career, but not many for sure. So, I'm not counting on that, but I'm just mentioning that there is some possibility that's going to be the case. Regardless, I had mentioned the other day when we had a friend a few days ago asking about what I think about the Aussie yen. I said that forget about the Aussie yen. Focus more on the Kiwi yen, because look how clean it looks. I mean, we have a descending channel, but we also have a horizontal support area that has been so strong. So, we were actually now, I think, close to testing that again. So I said, at least you have a very clearly defined risk-reward ratio, right? You want to belong, you know where you want to belong against. Now, in this case, if we rebound a little bit higher, you want to be short, you know exactly what you should be looking for, this like descending trend line. Now, if we break above this descending trend line, it starts being a game changer, because then the possibility of that quadruple bottom starts increasing substantially. So I'm monitoring this on a daily basis, and I'm really, really interested to see how that's going to play out. I might actually get involved with it during the next few days. It depends on how the market decides to unfold from here. But what I mentioned yesterday, and I want to stress out once again, is that my feeling is getting really, really bad. I think the situation with gold and silver might turn quite ugly because I see this as a potential bear flag. The fact that we got rejected from there, and the fact that we're now breaking below what was a triangle, what looked to be a triangle, and it actually was a triangle because it fulfilled. What do you expect from a triangle? You expect like a push higher in the direction of the previous move. That actually did happen because we did break above the triangle and we did push to new highs in comparison, to the triangle highs. But very often triangles are also terminal formation. So you get like one more thrust out of them and that's it. It goes to bust. And, combining how this looks with how silver looks, because silver actually looks like a triangle that just is just about to fail, especially if we close below like 1420. I even posted an intraday analysis early in the morning today, both for gold and silver, mentioning the possibility of a failure. I would be very, very, very careful here. Very, very careful. Because I think that especially if silver breaks below 1420, that's going to be an indicator that gold might make it all the way through that ascending channel and break to new lows as well. Now, having mentioned that, and since Coach asked for it before, this is the gold-silver ratio, and I want to point to how interesting and how technical the gold-silver ratio has been, because as you see, going back in time, there is a very interesting ascending trend line that dates all the way back to May 2011. If we go back to gold, I want to show you that because it's quite important. If we go back to gold to May 2011, you're going to see that it's just a little bit before gold actually peaked near 2000, just above 1900. Okay, so actually the gold-silver ratio, let's switch back to it, peaked, bottomed just before gold peaked. And since then, we have had this grind higher. The importance of this ascending trend line has been proven multiple times. But on the other hand, I do see the potential of this being some kind of a terminal formation that's going to point to a move, a strong move lower in the gold-silver ratio. But in order for that to get confirmed, we need to see this trend line support break. On the other hand,
I remember the last touch, Steve, of that up channel, it was a pullback right there.
Yeah,
I remember that.
Yeah, exactly. That we mentioned, you said, do you think we're breaking down? And as always, I was cautious. And I said, let's wait for it. You never know. This is an important trend line. We might just bounce from here. And actually, not only we bounced, but we have bounced in quite an impulsive manner. On the other hand, though, I have to say that look at this. This intermittent trend line is a parallel trend line to this trend line, and as you see, the market has respected that multiple times as a resistance, and we are approaching a confluence of resistances of actually this trend line, this red trend line resistance with this channel, which comes, let's say, roughly at 87.5.
And it's a wedge.
Yeah, and it might prove to be a very nice resistance for this whole thing to turn lower and perhaps see a breakdown from this wedge, in which case you would expect two things to happen. First of all, silver to start overperforming gold. And second of all, usually when silver overperforms gold, metals in general tend to do well. Okay, so that's why we pay attention. It's not, I mean, this ratio is not something that there's a reason for you to be looking like every single day, because as you see, it's something that's moving slowly and, it has broad formations, but it's something that's worth being in your radar, something that I'm watching like once per week or whatever to see where we currently stand with that. Okay,
so that's Steve, I know a lot of people have physical YouTube, but I mean, a lot of people have a lot of physical. So maybe up at that line, they could consider converting some gold into silver. Yeah.
Into silver. Yeah.
Yeah.
Yeah. And also, speaking of that, coach, let's not forget the following. Gold has been in a downtrend, undoubtedly from its highs. Its highs were at 1920.
Right.
And we made it down to 1,000. So that was a very, very decent depreciation. It wasn't 50%, but it was close to that. Silver, on the other hand, is a metal that was actually trading at 50 at some points, 50. And it's currently flirting, if it breaks below this triangle and it goes for another bear leg, it's going to be soon flirting with 12.5. So it's a metal that has been battered down, immensely. I mean, in comparison to gold, like multiple times more, right? So
80,
it makes
80%.
sense. Yeah, so it makes sense that at some point you should expect this dynamic, at least for a period of time, to change, right? I mean, silver can end up rebounding proportionally a lot more than disproportionately, I mean, in comparison to gold at some point. I mean, this dynamic at some point will shift. It's a matter of when, not if it's going to happen. It's not going to keep on underperforming forever. Nothing goes in one direction forever, right? And this is a trend that has already, going back now to the gold-silver ratio.
7 years.
Yeah. Going back to gold-silver ratio, then I'm going to pass it to Andre. This is a dynamic that has already been going for many, 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 many years. And one thing is for sure. There is a clear loss of momentum in this appreciation of the gold-silver ratio, right? There is no question about that. So what follows usually a loss of momentum when you have an already mature trend? A reversal, right? So I think it's a matter of when and not if. Okay, so let's find Andre and promote him.
That was a great analysis right there, that gold-silver ratio. It's very important for people who trade metals, physical and paper. That was great, Steve.
Thank you.
I'm a fan, man. I'm a Nostrobogi fan.
Thank you.
Hello, everyone.
Hey, Andre.
Welcome to the
analysis. Hey, Steve. Hey, Dale.
Welcome to the party.
Chef Andre.
How are you, Dale?
Good, buddy.
Are you feeling better? I know that you are not in your best shape. You are at 99.
You sound better today, though.
Yeah, you feel, at least you sound better today. Yeah.
Yeah. I feel good. I'm just waiting for your shark and the euro to work.
Yeah, let's.
I think it could, buddy.
It's an attempt. Yeah, it's based on that dollar index behavior.
Okay.
We have also, and not only because we have an harmonic pattern there, and we have this pound, this cable also.
Yeah, speaking of which, that's what I wanted to say. That's what I wanted to say. He has the screen. I can see his screen, Coach. Can you?
Can you? Okay.
Yeah, we can see.
I got it. Was me. me.
You're also a believer. I know that Blake has been monitoring the same harmonic pattern. You also believe that actually both euro and pound can actually rebound from current levels, right, Andre?
Right. It's based on the pattern that we have. I have no excuses to not to believe. So I trade those patterns, and once they are printed, I just need to execute the trade. I don't think too much when I find a tradable pattern. So I just execute.
You just follow the plan.
Follow the plan. If there's a risk reward that's worth the money at risk, so I can push the trade. But as mentioned before by Blake, we have also Aussie and Kiwi in a very interesting situation. So Aussie is printing a double bottom, what I call a technical double bottom on a daily. For those who are subscribing to our services on ForexAnalytix, I believe you are familiar with this chart. On a weekly time frame, at least I will try in a 2 days time frame chart. So we are threatening the 161.8 extension and the completion point for these major shark patterns. So it's a pattern that usually will search for at least a 38 and 50% retracement. And well, it's printed, and it's now supported by one eventual double bottom.
Double bottom, yes, because
I see it
basis. That was a false breakdown.
Exactly. And I consider this as a technical. I have two different double bottom situations. So I have a default or most common double bottom, and people tend to ignore the close price of the second bottom. And we may have sometimes a second bottom closing below the close price of the first one, and the market will react later. And I have a technical double bottom. A technical double bottom, in my point of view, is when I see a bounce from the second bottom, closing.
So only the wick of the candle touches.
Exactly. I need a retest. It's a requirement. Also, it's a requirement. The requirement is a retest of the close price and a rejection to trade below. And obviously we need to wait for the breakout of the neck. So at this point we have this major sharp pattern at 161.8 extension. We are trading a few points below, supported by this eventual double bottom. And if this double bottom starts to work, I will face these two bottoms as a false breakout. And if there's a false breakout, I will wait for, and I need to wait for.
How is that pattern called that points up to 161.8?
This is another shark pattern that revolves the 161.8. Yeah, it's a 161.8 extension, and the shark can extend to the 224 extension. So I have two zones.
I love the first zone because it points to 75 cents, and 75 cents has been a level of interest in the past. Exactly.
Previous so I love it. Support. It's a pivot. It's what I consider as a pivot zone that separates the most recent support and resistance levels. Yeah. So that's a level where I will search for those who are searching for eventual bearish opportunities on these. Around these levels, I will start to search for that pattern. Search for that pattern there. And this is Aussie, and it requires the broken neck, and it requires the breakout of this descending trend line acting as a resistance zone, pressure trend line. It needs to break.
It's not only a trend line; it's a channel actually.
It's a channel, as you mentioned before. Yeah,
it's a channel. But it doesn't matter because, as you said, the resistance trend line is what we care about if we're talking about the possibility of rebounding.
Exactly. And for Aussie versus yen, because I suppose it was you mentioning. I'm not sure.
I mentioned both the Aussie yen and the Kiwi yen. Yeah.
The Aussie versus yen, similar circumstances on a daily. We are facing the same double bottom or similar double bottom configuration.
This is a 2-hour chart, right?
This is a 2 hours time frame chart. We have here the reversal actually the inverted edge and shoulder, it's now breaking above the previous or the most recent resistance zone. So we are trading above the most resistance zone, and this is the default projection for. Actually, this is let me try 4 hours time frame chart to get a clear idea. This is the default projection for the inverted edge and shoulder formed and breaking now. So if the market decides to achieve that level, it will print another sharp pattern at 161.8 extension. Previous structure resistance, actually the market will violate and will break this previous and most recent major, not a major support, but based on this time frame, you can call this as a major support.
Question, Andre. I see that in essence, you would expect the rebound of the Aussie yen to be less impressive, at least from if this pattern plays out, from the rebound in the Aussie USD. Does that actually mean that you are expecting USD yen to turn lower? Because that could explain why the Aussie USD might produce a stronger rebound than the Aussie yen will end up producing. So what is your viewpoint on the USD yen?
Well, this pattern specifically will search, and by default, we talk always about probabilities, of course. The probabilities for that pattern to work and to search for the 50% retracement is a decent probability. And if that happens, as you know, it will complete the sequence, the 5-0 sequence, which is which can provide us a new bullish momentum. So this is a 4 hours time frame, 2 hours, 4 hours time frame.
Okay, so you mean that then we might have more upside? Yeah,
exactly. I can wait for that relief, and then I will project one eventually ABCD pattern above.
Got it.
But obviously we need to wait to confirm the market conditions once the price approaches those levels. If the price reacts and if the pattern reacts well, and if the pattern works well, we need to wait for that default level, and we need to observe market conditions once there.
Regardless, my question remains, because I know that a lot of people are perplexed by the behavior of USD yen. Do you have some harmonic pattern?
Yes, we have.
That gives you
I have a list of a few instruments that I want to cover. I don't have time to cover all.
You don't have time, but what I can promise you already is, if you want to join us tomorrow as well for another.
Oh yes, for sure. And for those who are subscribing to our services, I will update some of those charts today. So those who are subscribing will have.
So let's have a look at the USD yen, and if we have time, one more. Tomorrow you can
dollar versus yen, of course. Dollar versus yen is now breaking previous structure resistance and support level. Where is my line here? Breaking is not a sign of it's not broken yet. So we need to confirm these as a
daily
breakout.
Close.
At least a daily close. I believe most of the people will search for that daily close. So above this level, and if the market rejects to trade below this level, I can see dollar versus yen searching for the next cluster zone. My next cluster zone is positioned between the golden ratio and the 161.8 extension. It's also previous structure support zone. And
we're looking at the same thing. I was talking about the same thing. What we're looking for is roughly the 113.50 level. It's a nice confluence of resistances.
Yes,
but is there some kind of harmonic pattern that actually would complete?
Yes, at 161.8 extension, we have the perfect shark pattern, which it's the same shark pattern which will search by default by the 50% retracement. And this is what I like to search for when I start to project those patterns. So I need to try to get some confluence or synchronization between my targets and the previous structure. So it needs to make sense for me to validate these as a tradable pattern. So if the market forms this bearish shark pattern, the default target is the 50% retracement. Usually I search for the previous structure resistance in this case, so it will turn into a support. So I will use the closer Fibonacci level from this price structure level. So in this case, I will use the 38% retracement as an excuse, and as an excuse to short the market, to retest that previous structure. It's not the most perfect confluence, but sometimes we have, and the market can extend a few points above and print the pattern a few points above, searching for the 78% retracement. And that's why I like to call the people attention for the shark pattern at 224 extension. Every time I see the pattern completing at the 1618 extension, I need to call the attention for one eventual push, and that will depend on the market conditions there. So if the market decides to push above, there's another shark pattern extended at 224 extension at confluence somehow with the 88% retracement. So as a retest,
so that's
to the
near 114.20,
140, 30. But the first one, the one that I will search for initially and to start is this shark pattern.
Yeah, me too. I'm looking at the 113.50 level with interest. Coach, I know that we have today, thankfully to our new page, I know that today we have Matt. Is he with us? Are you ready to start your interview?
I'm looking for you. Matt, can you ask me a question on...
Matt, if you are here, please write something in the chat box.
Because I put up Panama Orange and it's not coming up in registered users here.
Yeah, so write something to us so we can see you in the question box and then we can promote you. So until we hear from Matt, you can definitely keep on, Andres. So I think we covered USD yen. So what are you looking for now? Oh, gold. Nice.
This is gold because I checked and I saw Blake mention it. We are now facing the previous structure support, as we can see here. This was a chart that has been published and shared among the ForexAnalytix community. So I was expecting this shark pattern at 224 extension. There are two levels, as always, for that pattern to work. As we can see here, the market has rejected to trade to close above the 1618 extension initially, and it has produced that 50% retracement as expected, and it has printed later the shark, the 224 extension. So the market has extended twice to those two levels, and it has reacted very well. So we are now facing the previous structure support level, very close to the 38% retracement from this major bullish momentum, which can act as a support. And right below that level, below the 38% retracement, we have the reversal extension, again, the 1618 extension, which can provide us another opportunity to trade. It's very, very close also to the 50% retracement. Obviously, this pattern, this crab pattern at 1618 extension, it's also another one. It has failed. If we look into this pattern in this time frame, if we increase a little bit this time frame into a 12-hour time frame, we can consider this as the last push above the pattern completion point, and it's now starting to fall from there. We are now facing also, and I can clear all these draws. I can draw that again. I can see this as one eventual, and we need to validate this as one eventual heads and shoulder forming, which requires
this can happen actually.
This requires the right shoulder to form. It requires a bounce and it requires a reinforcement of this level as a potential next zone. It can happen with one or two.
Don't forget though that we already have a technical event here, and if you draw a trend line from that lower week that we had in August to the previous low that we had, and you draw a parallel, you'll see that we actually are working in a channel, and we got rejected from the channel of resistance. So we already have some first signs that don't look good for the bulls. So if especially if we end up building a head and shoulders formation as well, that's going to make it even worse,
even lower.
Okay, Matt's here, coach.
Okay. Welcome you, Matt.
Okay.
Is that correct?
Okay.
Okay.
Matt. Yeah. Okay. So promote Matt and enjoy the interview, Coach.
Thank you very much.
All
Andre,
right, Steve.
Andre, we're expecting you tomorrow as well because we have more to cover. Thank you very much for being here today.
Thank you.
Thank you, Coach, for having us.
Okay. Thank you very much, Steve. Great review, Andre. Always good to see your artwork and your analysis. Thank you very much.
You too, Will. Thank you very much.
Okay. I'm going to make Matt the presenter. Not sure if he's going to be able to show charts, or I'll show what he sent me yesterday. How are you today, Matt? Panama, how are you? I'm hoping you got through the Panama Canal okay to make it to face. I'm just looking to see if your mic is unmuted. I'm unmuting you. You have to unmute yourself. Not sure if you called in. I see your screen.
No, he's self-muted on the right-hand side. There is a button to unmute.
Yeah, there you go.
There you are. There you go.
Okay, see me now, right?
Yeah, and I see. What are we looking at? Your phone, buddy?
Yeah.
Okay, so you could show the charts that are on your phone.
Yeah, I've got this is an S9. I've got all the latest updates, so I don't know why it was having so many problems getting it. I was in here. I was in here like 15 minutes ago under Panama Orange. Did my name appear at all, or I could hear you talking about the?
No, it only showed up. Yeah, because I can just search, and there was no Panama, but it came up Matt R. is how it came in. Okay. So that's why I couldn't find you. But anyway, you're here.
I am here. Yes.
And what an exciting time to have you. You know, Panama keeps in touch with me on Twitter when he sees things and puts out some real interesting technical work. It's almost like artistry as well, and has a view on the market. I believe I can label you as a precious metal bull, can't I?
Well, depending on time frame. Yeah, I mean,
okay, everything's dependent on time frame. Yeah. Okay.
I became one back in 2015, late 2015, just because almost every other asset was in such a bubble relative to metals, and it still is. I mean, that hasn't changed, even though, for example, housing stocks have crashed back to their highs from 2013, or the XHB has, at least. But just to give everyone a quick, biography, I was, how I ended up in trading. Well,
you want to show a chart while you're sharing your screen, even if you're not talking about it right away, because this will be like right on the video, just showing your phone. You may as well get to what you're going to address first, so people have something to stare at.
Well, what I'm going to do here is I'm actually going through my Twitter, just because you could do this yourself if you have a browser. It might look better than coming through the screen here. And
well, let's see.
Because what I did last night was, all right. Now, if you go to twitter.com Panama Orange, you can see these charts a bit more clearly, because I posted 4 of them last night in reference for today. Just as
they're pretty small. Can you enlarge them? And you're only on part of the screen. Why don't you?
It's a phone.
There you go.
Coach.
Beautiful.
Yeah, but yeah.
It's a what, Steve?
Yeah, it's a phone. So
right.
if he switches it, to the other direction only, we can see it bigger. Yeah.
Okay. So you want to talk about the civilian labor force, and like a lot of people have been saying for years, the numbers aren't real. And it's interesting that even on charts like this, you look at technical formations when they're data points. So, I find that fascinating. You can chart anything, can't you, Matt?
Well, you can. And, a lot of people make the point, or bulls make the point, well, the labor participation is dropping because of the, the percentage of older Americans keeps going up, and we have, a lot of baby boomers retiring. But this is the labor participation rate for people aged 25 to 54, which shouldn't be dropping. There's no reason for it to be dropping unless we have a draft or something, or a mass die off, or and it's making a third high as it has since shortly before 2000. Another lower high. It's making a bear flag, and that really kind of belies the idea that the labor market is hot and it's completely, we have full employment and unemployment's under 4%, all these nonsense figures. I mean, unemployment's been dropping for years and years and years because people were falling off the unemployment ranks. It only counts people who are laid off in the past few months. Once you hit your last day of benefits, you're not counted anymore. But just to squeeze in real fast, if people who didn't hear the last time I was on your show, a biography, how I ended up in trading. And I'll fit this like in 1 minute. I'll try to really fortune cookie Reader's Digest this. I was on the police during Hurricane Katrina in New Orleans. I joined the police there 3 months before Katrina, and I was there for the whole thing. And that really kind of gave me a framework for seeing how bad things get when strategy isn't used properly and when the authorities don't have their act together. As we all saw, in the 2008 crash, of course, but what I saw in Katrina was a bit more visceral as far as the effects of it, and that really got me thinking about strategy and economics later on, the fragility of systems. And by no means has that made me a perma bear or anything, but it has question, the official line on things and how things are presented. And the funny thing is, it's 2018. It's very easy to find all this data yourself. And there's a lot of people who do. You don't, maybe 15, 20, 25 years ago, to do economic research, you had to subscribe to all the good journals. You had to have good services. And now it's anyone could just find out that most of the things you hear aren't true yourself if you take the time. But of course, there's a real trap with that, because you have sort of these titans of alternative news like, Zero Hedge and all these alternative news gurus. And they fall into the same trap of groupthink themselves, because as we saw just recently with this like 75% drop in cryptocurrencies, all the alternative news icons were pumping those cryptocurrencies at the top, as they were, with precious metals at the top in 2011. But once again, they've shown that just like mainstream news.
That's because they're getting advertising dollars from people that have that business model or those instruments as part of their business model.
Oh yeah, and
advertisers, etc. So that they have a budget when there's a mania going on, right?
Yeah, it just goes to show how you have to really be careful with any
discernment.
You have to do your own analysis.
Yeah, discernment. Some people call it due diligence, Matt. You also have to be very discerning in what you take to heart as gospel, and right. Look at things from a few different sides. So now you're showing wage growth kind of looks similar. Can't we break out to the upside here in wage growth if Trump gives the middle class a 10% tax cut?
Well, here's the issue when it comes to, what's real wage growth going to be. We have the dollar has just been parabolic recently. So in real terms, that means, your actual buying power is up. But we have the national debt now breaking like 22, 23 trillion. With all the tax cuts, we know it's going to go straight to 25, because remember, the corporate tax cut a year ago was supposed to pay for itself and start paying down the debt with economic growth. And that never happened. It never has happened with a tax cut like that. So we're going to have a national debt running to 25 trillion really quickly. And, that all does tie into exactly why things like gold and silver are so cheap at these levels, because gold, you could just see fundamentally, there's a good show on Discovery Channel, the Gold Rush Alaska. It's been on for years.
Oh yeah.
And there's a lot of good miners on there who work really hard. They know what they're doing. They're very competent. They're working 16 hours a day. They're pushing their machines till the machines explode in their face. And they cannot make money. They cannot make money at these prices. No matter what little fixes, no matter what they rig up, no matter what schemes and they're doing the best they can. It's in no way.
All right, so for like I'd call this like a prop shop of miners, right? Just they're professionals, but they don't have scale like the miners. What's their production costs on that show? 1,200, 13, 1,400 an ounce.
They go over their oil. Believe it or not, I'm in my car right now because my Wi-Fi.
You're not driving. You're not driving.
I'm not driving. I'm parked.
Right.
But now there's leaf blowers, so I'm gonna have to drive around the block to get away from them while talking to you here.
Okay.
God damn! Just as I'm doing this interview,
Who invented those things anyway? Huh?
I don't know. There's a really good.
He needs to spend time in purgatory. Whoever invented that, for all the purgatory gives us, every time I hear one. All right, so you're a bear on the economy, and lately the news is flipping a little bit.
For a variety of reasons, not just Democrat, but the thing with what's going on with employment is, politically, it's not really the fault, or there isn't really a political solution. Like you've seen a lot of, Trump complaining about Amazon, and he wants to stop their deals with the post office, and that's such a small part of Amazon's business. So even though he wants to do something to curtail or keep Amazon in check, he has no ability to do that. They're more powerful than any nation state at this point. And we see with our own eyes, if you go shopping at any shopping center, and I mean a good shopping, so like one that was healthy, in an economically robust area. We have one, like right in my area, there's one called Village Crossing. It's huge. One of the biggest shopping centers, like in Northwest Illinois. And you go around it now, and 2/3 of the stores are empty. And this is not in a bad way. It's not in a bad neighborhood. So you have the collapse of the brick and mortar retail model, as we're seeing of Sears, as we're seeing of 50 other companies. But it's happening in such a slow fashion where they're not all blowing up all at once. And so people, it's because of that slow motion train wreck, people are kind of they're underestimating how much structural damage that's doing to employment. And that's exactly why labor participation for prime age people, which is the real unemployment rate. We can debate all day about broad labor participation and if that's retirement, but people are not retiring. Most people are not retiring at 53 or 27. So there's clearly, we do not have a booming jobs market. It's nowhere near the last two booms.
So what about the argument that it's just that these people don't have the proper training for the jobs that are available?
Well, there's only so many people that are going to be able to develop apps and, live in San Francisco with a $3,000 rent. And that's increasingly a narrow scope of these new tech jobs that are being created. But I'm just going to bring up a market chart here. This is this is actually before the drop happened, but just, people keep talking about the double top we're forming in the S&P. And it's not actually just a double top. Also on like the weekly and daily, you had this bearish rising wedge.
Yeah.
But more importantly, you had this what is called a big M top, which is an interesting pattern because it's a double top that looks like an M, and when you get to the second phase, you get that really steep drop, which we've kind of done so far. Now all these technicals look really bad for the S&P short term, but of course, fundamentally, if the Republicans hold Congress by one seat, because most people are expecting them to lose the House, if they hold by even one seat, 2 seats, whatever, or 13 seats, which I think is possible, as crazy as it sounds. In that case, we're probably going to go up and retest all-time highs in December before the end of the year. I do think that will come right back down. Maybe not as fast down, but we will. That push will fail for a few reasons. For one thing,
a hell of a relief play, or couldn't it be just a failing rally? Maybe not make new highs, and maybe rally back to 2850 or something like that, a lower high.
Yeah, it could just get close. But the thing is, first of all, the Fed, I think they're going to push rates to maybe 5%, even though housing is flailing. And the reason they're going to do that is because all the elite, all the people with the money, or the super elite, they've accumulated so much real estate at this point that they can't lose it even as rates go up. You'll lose your house to the bank, but the bank isn't going to lose that real estate. So the Fed's happy to try and shake people out, push rates to some crazy 1980s level, and cause a crash because their friends already have so much. The Berkshire Hathaways, they have so much property that they don't need to accumulate any more property. But whenever there's a crash, as we saw in 2008, the rich get richer by a substantial amount. So they could be trying to set off a crash intentionally. Now, you see, well, they're trying to set it off to hurt Donald Trump. Well, yeah, but there's many times in history they've set off crashes to just help themselves, with or without the president. Sometimes it's just their own. It's to their own advantage to do that. No matter, even if Hillary had gotten elected, they might be doing the same thing. I'll tell you, the thing with Trump.
What's the advantage of the Fed, for the Fed or for anyone else, setting up a crash besides what you say is people can buy up assets on the cheap?
Sorry, Coach. I want to add to that because I was about to ask. To me, Tom, it makes no sense. Matt, sorry, seeing the Fed raise to 5%, and I'll give you 3 different reasons. Unless we see a breakout of inflation, that they can then excuse it on that, and that's going to be a pretty good damn excuse. But so far, we've seen all governments do their best to actually hide inflation in the way and the methodologies. By shifting the way and the methodologies, they dynamically calculate inflation. So they've been doing the exact opposite. They've been always giving a good excuse not to raise rates and not the opposite. But other than that, how exactly is the Fed going to reach 5% when there is no single member of the Fed that is projecting forward a rate more than 3.5, 3.75%? So, the average of what they consider now normal rates is like 325, 350, and the economy couldn't even make it to that the previous time in 2008, when the fundamentals of the economy were a lot stronger than what we currently have. So I really fail to see how that might be even close to possible of happening, because I believe the market is going to be in full panic and breakdown territory a lot long before they even make it to that. Yeah, exactly.
What do you say?
Well, I believe, like we saw in the 80s, or like what was the height of rate? Was it 12%? They went to some crazy level.
We had short-term rates at 19%, and I think bond yields
22%.
Yeah, bond yields were like 16% on 30 years or something like that.
Yes, something like that. Although, Coach, there is a little thing, because people that that only know the let's say just the key points of economic history. First of all, and second of all, keep in mind that there was something very important back then. The duration of the U.S. debt was high, which means that when they actually raised rates that high, it didn't affect so much the cost of borrowing, because the maturities of bonds back then that the U.S. had were actually high. Now
long term, you mean more long term?
Yeah, more long term. The duration was a lot higher. So now we have the exact opposite situation. Trump as a candidate, another discrepancy. Trump as a candidate was saying and was blaming Obama for not borrowing longer term so he can actually increase the duration, the maturities. And during his tenure so far, the maturities, the average maturity of treasuries has decreased even more, which means that by raising rates today in comparison with back then, you will be feeling the pain immediately. Yeah, you will be feeling the pain immediately. Exactly.
Well, he's the king of debt, he said, our president. and now he presides over an empire of debt.
And also
what a great fit. Go ahead.
He started the public fight with them, trying to pressure them to do what he wants them to do, which is keep things easy, and just to assert their authority alone. That's why they might push it at least above 4%, just to say, hey, we're going to show you in charge, and and it's really, because Trump's argument that this is the best economy ever, if that was true, then he wouldn't need to worry about the Fed. The Fed wouldn't be able to hold the economy back. They'd be trying things, and the economy would just be roaring ahead, and they'd be tapping on the brakes, and it would keep going. So clearly the economy isn't as strong as he makes it out to be. Like
on that, Matt, we agree 100%. A strong economy not only can handle high rates, but a strong economy actually needs high rates, because
thrives on
it thrives on them. Why? Many people don't realize the basic savings, which of course, when you have more, is actually the steam engine of investing. That's why you need to give an incentive to people to save.
Steam engine. Yeah, I like that.
Exactly. We have so much we had so much house flipping. If you look at the XHB, the monthly chart of the XHB, it has gone all the way back down to the highs of 20. If you bought towards the end of the year 2013 and bought it, that ETF, the housing ETF, you've now made no money since the year 2013. And people will laugh and go, "Oh, I don't know." Well, someone bought housing stocks in 2013, and now they've made no money since 2013, because the housing market was like becoming the core of the housing market. In fact, it still kind of is. That's become the main thing. There's a lot of people in their 30s and 40s and 20s where it's like they can't get another job, so they get some money from their parents or something and say, "Oh, I'm a house flipper. I'm a real estate investor." And we can't. The idea that can be, such a broad, an industry. Whenever that's become an industry in any society, in any situation, there's always some kind of real estate crash, because it's not what you're supposed to do with real estate. It's not supposed to be. You should have a small percentage of the population working as brokers, flipping houses. But
you mean, Matt, you hear that more than people, millennials going to their parents and saying, "Mom, Dad, I want 50 grand so I could trade the guppy." And they'll go, "Guppy, what's that, a fish?" "No, Mom, it's a pound yen." So,
that's not what's supported by, the television and the mass media. It makes house flipping look so easy. It looks so hip. It looks so culturally, the right thing to do. Yeah, trading.
They even have that television station that runs all day that people watch. HGTV. Yeah.
And there's about 50 other shows on like 5 other channels of house flipping.
Do you think house prices can get hurt as bad as they did in the last recession? Because I'm hearing people say, because it's not a derivative problem in real estate, that they're more immune in a recession to price drops. What do you think?
They'll get devastated, because most of the real estate right now is held by people over 60, people over 70, and they're holding these houses where they have 4 or 5 extra bedrooms, and they're barely paying their property tax, because property taxes keep going up because of pension obligations and just maintaining the roads. So we have a mass glut of real estate in this country. That's why you see these nonstop reverse mortgage ads.
Harry Dent says, houses don't die, people do. So the houses are still there long after the people.
There's way too much. There's way too much housing real estate that's in the sprawl, in the suburbs, that is not seeing jobs appear adjacent to those houses. We're not getting the new factories in the suburbs. We're not getting the new tech hubs in the suburbs. There's a few areas, San Francisco. There's a few other towns where when tech likes to funnel itself in just a few cities and pile up all the jobs in a little hyper concentrated area. The wealth does not get spread around. Now the wealth will get spread around in the sense that you have a relative who's driving 14 hours a day delivering Amazon packages, and they have them peeing in a bottle, or they're driving Uber 14 hours a day. And that's one of the things that drove this recent cryptocurrency, the bubble in Bitcoin, was all these poor people hoping they get a lottery ticket, hoping they get this investment where they can just get out of their horrible underpaid jobs.
And
that's crypto. It is tragic, because crypto, that bubble, peak to trough so far, has been as devastating as the 2009 crash, and it happened faster. And what's worse is the stories people were telling people at the top of $1 million, $100,000. They expected to have Bitcoin at $100,000 as I'm talking to you right now. Like,
yeah, I know. By the end of the year, that was a call. You know what? I want to get to something real, and there's nothing more real than the archaic relic, gold. So looking at your gold chart here, Matt, underneath the smaller box shows a yellow line, neckline breakout. What price did that occur at?
Okay, this chart is actually from like 2 months ago, but the pattern has not changed since. And this is
where was the neckline? Where did that come in?
This is what you call a giant inverse complex head and shoulders, which is a inverse head and shoulders, bullish, but it has 4 shoulders. It has like 2 on each side, and so it's a little more powerful. It's a little more powerful. You could call it that. A few people have talked about this pattern, like Bulkowski. He's got it up on his website. But if you go into Google and type inverse complex head and shoulders, or complex head and shoulders bottom is what it's most often called. But the thing is, I think, if the Republicans keep the House by 1 or 2 seats, which they easily could, because now he's promising illegal immigrants, they won't have birthright for their kids if their kids are born here, and he's going to give tax. He's making all these promises that might never happen, but that's he's very, very good at just throwing things off the top of his head and getting. So let's say he keeps the House by 1 seat, and we get this panic sell-off in gold, and it goes to say 1130 to 1150. Well, that's where it went after he got elected in 2016. But if you look on the monthly chart of gold, that little blue box, the second to last blue box, that's where gold sold off after he got elected, but it never went and tested those lows from 2015 under Obama.
Yeah, that was 1050.
Yeah, it was about 1050. So
all right, so I'm going to ask you the question again. Where's the neckline on the chart underneath in the little box on the gold? Where's your neckline?
That's around 1130 to 1150 area. Just
the
in
neckline?
The neckline, yes. The neckline is right around, if you look, because that was the low. But
okay, I would have thought it'd be well above the 1160 low. You know what chart I'm talking about? It's the bottom right little box, and you have a neckline there that it's already broken out of, and I don't think that's 1160.
Well, if you look down, I zoomed in.
The price?
If you look at the second to the if you look at the there at 2016, at the end of 2016, it went all the way down to. I went back, looked at the price back then. It went down to like the 1130s. So it could go to the 1130s, and it will not have broken that low.
Okay. I'll ask you one more time. The reason I'd like to know where that neckline is and the so-called breakout that you have is I think that would be a good fail-safe point for if people are still bullish gold, if the breakout's negated, to get out of the way. And I don't think you can give me a price level on that, can you?
Okay, a negated, a neckline where the neckline would just be negated entirely. Well, I think that would be a monthly close below 1130.
Oh, okay. All right. Okay. I thought it probably came in higher, like 1200 or something like that, where it broke out. 1208 something.
Blue boxes.
I don't think you know. How about that? You're guessing.
I think if we go all the way back to where, if we go back here.
Well, I mean, you have the chart right there. The only thing that's missing is the price graph on the right to the right of it. The complex bottom, and you have a yellow neckline and an arrow for a breakout. That's the price I want to know.
Right. Well,
and you say that's 1160, which was the low of the move recently. It wouldn't be an up candle or bar. Anyway, okay, so you think that there's a possibility of one more washout, and it would be because the blue wave doesn't happen, and the stock market rallies and gold flushes and fade them both.
Right. That's the general thing I do agree on. As far as I just think fundamentally, as far as the cost of gold right now versus its mining, that is. What is going to make gold suddenly cheaper to mine, unless oil just crashes to $20?
Oh,
unless
there are some guys talking about that. I never thought about that. Yeah.
That just doesn't look like it's. I mean, oil. We haven't even started some conflict with Iran or conflict of like oil is trading as if we're in a war right now. It's so expensive, but we haven't even started one yet. So if anything happens where the negotiations for Iran go bad or negotiations anywhere go bad, oil could quickly go above 100 because nothing's shooting anybody, and it looks, if you look at the price chart of oil right now, you'd think we were, and that the price of silver and gold relative to mining it's cheaper than it was pretty much at any time. And relative to the cost of real estate, relative to the cost. I mean real estate. I mean the cost of buying a mining strip. I don't mean like a house. I mean like the cost of you're going to go out, buy all your mining equipment, buy your mining cut, buy fuel up your trade. It's never been the product you're putting on the market has never been this cheap relative to what it costs to make it. So let's back out of this.
Anything you want to wrap with, Matt? Do you have any kind of business model? Do you teach, or you just trade for yourself? Is that really what you mainly do?
That is what I mainly do. I taught. It took years to really get good at it by learning from a lot of different. I studied technical analysis. I studied fundamental analysis. I studied a lot of different types of technical analysis, like volume profile and chart patterns, and
well, you have a lot of followers on StockTwit. So let me ask you, why do you tweet? You're just a humanitarian that wants to help people and keep them informed, buddy?
Well, I do hope it has some influence on the markets I'm trying to trade. I do have almost like 30,000 people that follow me on StockTwits.
Okay.
This is just one last chart to squeeze in.
Oh, yeah, Litecoin.
Yeah, Litecoin, one of the few cryptocurrencies I think will survive. Litecoin will survive. Ethereum will survive. Bitcoin will survive, but it's getting so confusing with all the forks of. There's like 4 different forks of Bitcoin now, and I don't even know which one to deal with. But I'll tell you, Litecoin has a really nice. So does Ripple, but Ripple has a lot of negative. A lot of people have a lot of contempt for Ripple because it was created quote unquote by the banksters. And so I don't know, that could be a problem for Ripple because a lot of people don't trust it. They don't like it because it was like if you believe that the banks are going to maintain their power, then Ripple's going to do quite well. But here's the thing, the Litecoin chart I'm showing you and Ripple, they both have about the same looking pattern, which is an obvious big, huge bullish falling wedge. It's like a year-long bullish falling wedge. And you have, mass capitulation in the crypto space after we had this, huge 75-80% sell-off. So it's finally, we've reached that washout phase in terms of sentiment, in terms of a setup and a chart pattern where, here between like under 55 and Litecoin, especially under 50, I think it's actually a really good deal. And more importantly, between now and the election, which is very close, but I don't see an election risk with Bitcoin. I don't see there's some shocking news on what happened if the election and everyone's going to sell off their cryptos, or buy crypto. It might not.
Well, yeah, we had a pretty good test with the sell-off in the FANGs and everything else in the market. 12%, and a lot of things cratered 30%, and cryptos have been dormant. Like I describe them as like a dead patient with what their EKG would look like, dots.
Oh yeah,
no
and
ranges.
my call on them isn't that they'll necessarily go make new all-time highs, but even if they just dead cat bounce at following, say, this bearish falling wedge,
it could be a triple. But
it's still, that would only take like Litecoin to 150, and the all-time high was like 410 or 401. I don't know what the exact high was. It was around 400. We might never see that for 5 years, 10 years, but the triple or the double from here could happen within 3 months, 6 months, because cryptos, when they move like penny stocks sometimes, and that's also why they're not appropriate for this idea that all this institutional money is going to come, all this older money is going to come. No, because it's like trading a penny stock. And it's
people pay people to come in and create volume and buy it. They're like with penny stocks. That's what investor relation firms do. They'll have a pool of money, and they're paid to come in and buy the stock, so the insiders could get rid of some of theirs.
Right.
I know that business.
Well, it is tragic because I saw a lot of people in the alternative news, quote unquote, community on YouTube, and they chased crypto to make up the money they lost in precious metals, and they lost more money in crypto. And it's like, what?
Yeah.
And now down here, it's like
it is a nice wedge.
Yeah, well, I'm sorry, it keeps flipping. Like when I'm holding my phone to my face, the gyro sensor in the phone keeps flipping it horizontal. But just by the way, this is a Galaxy S9 I just got, and it's like more powerful than my laptop. My laptop's, I only bought it like 3 or 4 years ago, but that's where we've reached of technology where your phone is more reliable than your and faster than your computer. That's why I'm on my phone. It's a little awkward.
Yeah, you could really be a nomadic trader now. So
there's no reason to be anywhere. There's no reason to use your laptop over using your phone nowadays. Your phone is more reliable than like Windows 10. Even though, I mean, my laptop's fine, but the smoothness, like I've got this S9 is it was hell getting off Sprint. Like I left Sprint finally after like 12 years. I stayed dedicated to Sprint because when I was in Katrina in New Orleans, the only phone service that still worked was Sprint, and I happened to be on Sprint, and I was like lending my phone out to people. So it really psychologically got me stuck with Sprint. But then their customer service started getting worse and worse and worse, and their prices kept going up, and it became just like the worst company in the world. And that's another sort of sunk cost fallacy. I mean, here's the thing: like with Donald Trump, I supported Trump up until the election. I thought he'd pivot a bit after the election, but since then, maybe from watching Fox News constantly or some weird echo chamber, he's gotten more and more focused on one particular demographic, which is his conservative baby boomer demographic, which is it's like he's boiling himself down to a very specific target audience and how he talks. If you look at like the Apprentice, he didn't behave like this on The Apprentice at all. Remember all those board on? If you watch The Apprentice, I watched like almost all of them. This is like a totally different personality because he's structuring it for the boomers. And the problem is, we have lots of confident boomers out there, but we don't have a lot of confident millennials. We don't have a lot of confident Gen Xers, and all these, a 70-year-old who's super confident about money, that could only do so much for the economy because they need to start taking that money out to pay for their medical bills, to pay to retire, and all their confidence, that's great, but you need more confidence for, something that's going to boost the confidence of younger people. And you can't just, and there is sort of a vacuum being created, but there's just enough with his demographic, like he's got them so energized that older demographic is probably why I think he has a good chance of holding Congress in the House, because they're going to go out and they're going to vote because he's got them feeling that, the U.S. is under invasion and it's going to collapse, and Antifa is going to attack you in the Denny's parking lot. And it's like he's so good at selling fear with people.
Yeah.
That's just enough to push him over that.
We're gonna try and get off some of the political stuff of this, Matt. But I appreciate you coming on, and real interesting looks on.
I'm just making the point why the market is more fragile than it looks, because it is the optimism of Trump. Older Trump supporters, and all the optimism. They don't have that new income coming into their pockets to back it up. So yeah, we'll see another spike of that if he wins, and we're seeing it now. But that's like Harry Dent, like you brought up earlier. He points out it's that optimism it's fleeting, unless that optimism translates to all the younger demographics underneath. That's one of the reasons the market's fragile. So I wasn't just trying to attack Trump.
No, I'm not saying that, Pat. I'm not saying that, Matt. That you are. I just wanted to kind of wrap things up here. And I appreciate you coming on and some real interesting looking charts that you provided. And want to thank you for being here. And good luck. You know, I'm going to be watching these things into the election, and good luck on the gold, and good luck America with everything that's happening in the streets. So want to thank you for that. And I also want to thank our audience today. And if you took the turnaround Tuesday trade in the euro, you could take half now. You're up 28 from the opening. And the Dixie, you're up about 24. Take half, full stops to BE. Thanks once again, Matt. I'll keep in touch with me on Twitter, and I hope your trading goes well and you get your triple in Litecoin and gold continues. I'm looking for a place to buy it myself, and appreciate all the input you give me on Twitter throughout the days. And
I think fundamentals, all charts aside, I think fundamentally, you know, 1159 in gold or 1160, that's the area where it's real. You should really start. You know, we may not get that again, but if we get it, you know, if Republicans hold Congress by one seat, I think 1160 just is my. You know, that's an area. Now, if they lose Congress and gold goes, you know, rocketing into the stratosphere, you're going to get more pullbacks. I'll keep you updated. I'll tell you, but you know, never. There's no reason to go chasing it unless there's some huge natural disaster or huge event. You never want to chase anything. As you know, you're a very experienced trader. But yeah, there'll always be a pullback. You know, to some other level, some other pattern will be. So, but yeah, thanks for having me. I really appreciate it, and you know, good luck to everyone here as well.
Matt?
Yes.
Still there? Okay, so we're going to look at some pretty good political history coming up here in a week. So you're gonna vote, right? I mean, people that complain about things and don't vote, there's something wrong with that picture, isn't there?
Yeah, I'm registered. I'll be voting.
Okay. All right. Well, Matt, good luck on you know, all of your trading and everything that you do here. I just want to show the community something here before I say goodbye. I had to change my battery. So this was the euro at the face opening down here in the 50 range. So about 30 there. And the Dixie was up at this candle, just starting to turn red. That's working. So turnaround Tuesday successful. Hope it helped you guys. And Matt, what a great interview. You could follow Matt at Panama Orange. And his charts are like artwork. So thanks once again, Matt and Face. And remember, everyone, don't just count your pips, count your blessings. And we'll see everyone tomorrow. Thanks again, Matt.
Thanks again, you. I'm glad to be here. Thanks.
Thank you, buddy.